The incident was recorded at 4:18 p.m. A delivery vehicle struck a loading bay door. The operations manager completed the internal report and saved the photographs. The customer said the repair could wait. The broker was not notified. Months later, a formal demand arrived after the policy renewed, and the first question was not how much the door cost. It was when the business knew about the incident, what it knew, what the policy required, and why notice was delayed. This is a dramatized composite. The company's, people, incident, demand, and policy details are fictional. The question is real. Is an internal incident report the same as notice to the insurer? This composite follows a routine incident, an internal report, a delayed demand, and the policy notice questions that appear after the file changes hands. It does not decide a coverage outcome. Notice conditions, policy wording, timing, prejudice, jurisdiction, and the facts all matter. The practical goal is to identify what should be escalated and documented early. Business did some things right. It recorded the date and location, photographed the damage, identified the driver, and opened an internal file. But an internal record is primarily an operations and evidence tool. It does not necessarily tell the insurer that a circumstance may lead to a claim, and it does not necessarily satisfy a policy condition requiring prompt notice of an occurrence, claim, or circumstance. The customer sends a formal demand months later. The demand includes repair costs, alleged delay, and lost business. The operations team forwards it to management, who forwards it to the broker. The policy period has changed. The business now has to reconstruct the timeline. When did the incident occur? When was it reported internally? What did the customer say? When did anyone foresee a demand? And what communications were sent? Delay has turned a simple event into a chronology problem. Notice conditions exist so the insurer can investigate, assess facts, preserve evidence, and respond within the policy framework. The exact condition varies by policy. Some wording focuses on an occurrence or incident. Some addresses a claim or suit. Some may address circumstances that could give rise to a claim. The policy wording controls. The safe operational lesson is not to diagnose coverage from an email. It is to escalate potentially significant events through the broker or insurer process promptly. The internal incident report is not automatically the same as notice to the insurer. The broker email is not automatically complete notice, either if it omits the occurrence, parties, dates, allegations, or documents. And a late demand does not automatically decide the claim. These are separate questions that require the policy, the communications, the timeline, the jurisdiction, and the actual facts. Day 1, the loading bay damage occurs. Day 1, an internal report is filed. Week 2, the customer says the repair can wait. Month 3, the policy renews. Month 4, a formal demand arrives. Month 4, the broker is notified. Each step may matter. The file now needs the original report, photographs, emails, repair records, customer communications, policy periods, and the reason no earlier notice was sent. The review separates the facts. What did the business know on day 1? Did anyone reasonably anticipate a claim? What did the customer communicate? What did the policy require? Was the demand a claim, suit, or circumstance under the wording? Did the delay affect investigation or defense? These questions are not a verdict. They are the map for the broker, insurer, and counsel to assess the actual file. This episode does not say that every late notice defeats coverage, that every incident must be reported in the same way, or that an internal report has no value. It does not apply a particular provincial rule to every policy. The result depends on wording, timing, facts, prejudice where relevant, jurisdiction, and the applicable legal framework. The file is reconciled by placing the incident report, customer communications, policy periods, demand, photographs, and broker notice side by side. Create an escalation rule for events that may involve injury, property damage, a customer demand, a contractual dispute, a regulatory inquiry, or a circumstance that could develop into a claim. Preserve the original messages and photographs. Record who knew what and when. Send the policy-relevant facts to the broker or insurer using the agreed reporting channel. Do not wait for the demand letter to become certain that the event matters. An internal report preserves facts. Notice to the insurer activates a different process. The policy wording and the timeline determine how the two records interact. When an event could become a claim, escalate early, preserve the evidence, and let the broker or insurer assess the policy condition. This has been an insurance case file. Educational information only, not insurance or legal advice.